Good morning. It is Tuesday, January 16th. We are on the day. Let's see, live look here on Seeking Alpha. We're down. I mean, we were down even more before. You got quite a few names that are coming in down. Apple is continuing to dropping, even as it surpassed Samsung as 2023's top phone maker. You got that kind of news. I love, by the way, Seeking Alpha. I geek out all day on this stuff. Let's look at some things because right now, the upcoming week is historically one of the worst for the S&P over the last 2 decades. 32% win rate with an average return of minus 0.5%. So the fact that we start out down is not shocking on a short week. You've got some earnings that came out this morning with Goldman Sachs and Morgan Stanley. Both were good. If you didn't know, TrendSpider has seasonality data in it. If you're not subscribed, you can subscribe. If you go down here, if we look at QQQ and we look at some seasonality data for the last 12 years, we will go back to 2011. We can see the current week here, you're 67% positive on the NASDAQ with a mean change of 0.25%. So that's over what, 12 years? We can go back even more. Let's see. If we go back to 2004, which is 19 years, not a great week. I mean, it gets even worse. So this includes the housing crisis, all of that stuff. So, take it for what it's worth. I did load into TQQQ last week, and I loaded into QQQ last week. So maybe not great, but I will be dollar cost averaging over the next month or so. So I'm not too worried about it. I'm still bullish on both TQQQ and QQQ. We'll go over those charts in a little bit. But I did want to bring up, hey, it's a little bit of a cash drag if we start to go down. But those are all of those, even TQQQ, I don't expect it to be a 1 week investment. I expect it to be a month or 2 month investment. This is a great newsletter. Fantastic newsletter from Josh Brown. If you're focused, and I do focus on PE. In fact, the newsletter, the paid newsletter, I did an educational series. I've started this. We're going on week 3 next week. I've done 2 weeks. Super positive feedback about confirmation, MACD, button hook, algorithm. What do those mean? Cross up, RSI, Bollinger Bands, levered ETF, all of the terms that I use on this podcast. If you're a listener, I would suggest signing up for the paid newsletter. You do get a free 7-day trial. So if you want to just read those this week and look at them. But this newsletter from Josh Brown, it's completely free and it is fantastic. His basic focus is do not worry about PE. It has been much higher in the past and stocks have still continued up. So not 16 times 0.15, 165 times earnings. That's the average that Netflix has traded at, 165 times earnings. So it's not 16.5. It's remember, the average forward earnings is 17. So this is 165 and Netflix stock has continued to go up. His point is don't worry about PE. Don't know that that's always the case, but it probably is. If you want to know the largest U.S. companies by market cap, this is interesting because remember, Microsoft just overtook Apple for a brief moment. And as Apple continues to go down and Microsoft continues to go up, these two fluctuate, blah, blah, blah. But this is the largest U.S. company by market cap by year. Microsoft in 2000 started it off. GE in 2001. And then Microsoft jumped back up again. ExxonMobil for 2005 to 2011. Apple took it over in 2012 and has continued. 2019, right before COVID, Microsoft was the big one. Apple jumped back up. So what you're seeing is Apple and Microsoft probably come through. If AI is to take the place of phones and actual hardware, maybe Microsoft jumps up. But I will bring you this. I was running this weekend, and Apple. I haven't had this happen before, but I guess it's, after Googling it and looking at it, it's been a month, maybe 2 months. But I'm running, and my friend texted me a photo of the Bills Stadium, the Buffalo Bills Stadium yesterday. And it was a photo of Josh Allen on the field next to some snow. And as I'm running, I typically, if you don't know, when you're running with AirPods and you have an iPhone, your texts are described to you. So it tells you the text at the actual text. This in particular was just a picture. Now, I haven't had this happen before, and I do go running and I do go walking a lot, so I do get these things. And it typically will tell me, your friend Dave has sent you a picture. Well, yesterday, and again, it was the first time, but I guess it's been going on a month, but yesterday was the first time it happened to me. It said, your friend Dave sent you a picture of a football player in a stadium surrounded by snow, and it looks to be a screenshot. That tells me not only is Apple maybe doing some of those photo, like, if you go into Apple Photos or if you go into Google Photos, you can facial identify who these people are, so that if you want to see your pictures with your mother, with your father, you can identify them and you can pull them up easily. They're doing some recognition of photos, but they're also probably doing some AI. And it was my first thing into AI. And so when I look at this, I say, is Apple going to overtake Microsoft, or is Microsoft going to take Apple? Well, Microsoft is the first one to actually monetize some AI with their collaboration with ChatGPT and to do the Copilot stuff. But is Apple silently getting into this? Remember, if you go to Seeking Alpha, one of the head stories is that Apple was the largest phone seller. They overtook Samsung last year. So Apple has those devices in people's hands. Could they charge $2, $5 a month? Is there something that they could put into their services? Maybe it's part of the Apple One program where you get upgraded AI as part of your total Apple services contract. Maybe that's what they do. But again, Apple's going to be smart about doing this. Where is Apple? Apple, listen, if you go to weekly, we can even go to monthly. Any pullback on Apple, it is back down at 181 right now. I think you should be buying it. Is it going to get to the 170s? Maybe. Maybe it's going to get to the 170s. Don't hold off and be too late in this one. Now, here's the thing. The algorithm got you in last week, and we talked about this with the scans. At the end of the podcast, I do scans. The algorithm got you in at 184. You're trading at 181. So right now you're down. I said, hey, there's not a lot of confirmation here. But if we are going, we could be covering this gap up to 192. But be careful, because we don't have confirmation over this 9-day. It's fallen down, and you're down below your 200-day. What happens when you trade below your 200-day on Apple, on the 4-hour algorithm? It's been a buying opportunity because you're getting back above that 200-day. So I'm still bullish on Apple. I don't think you should take your money out of Apple. They have earnings coming up. We're in the middle of earnings season, February 1st. So I like that one. I like that one a lot. And this particular chart showed it to me. Savvy Trader featured me and my trading portfolio on their Instagram. And it was interesting. Savvy Trader, so I have two portfolios. If we just go to Savvy Trader, I have two portfolios. There's a core portfolio, which is the 35 positions that I recommend for traders. And there's the trading portfolio. They highlighted the trading portfolio. The trading portfolio is not free. It's $25 a month or $400. If you want to see the trades that I take, you can do that. I'm not super bullish on, hey, you've got to pay for this. I would much rather see you pay for the newsletter, which is $120 a year, which is less than $20 a month. I think you'll get more out of that than actually following my trades, because most of my trades I put in the paid newsletter or even in the free newsletter. Remember, 5 days a week I put out a newsletter that's completely 100% free, and it tells you what I did. It's the weekend where I give you the education. Savvy Trader, I think it's solid. I do have people that subscribe to this, so I continue to do it. If you want to subscribe, I'd appreciate it, but I don't think that it's 100% necessary. Mara. Let's talk about Mara. because Mara and other crypto, it's crashing. Did I get out? No. This is in my trading portfolio. I am in at 26. It got to 30 twice. I've been doing the podcast, and every time it got to 30 and I said it was a $30 stock, I didn't get out. This is kind of similar to Palantir. It's lost its confirmation. It's on the downward side of the Bollinger Bands. If we bring the volume back to where we traded, we bought in on November 10th at $9. You can see this is no man's land. So this volume, the shading on the right-hand side from TrendSpider, if we pull it back to recent highs, which was back here in July, where it did reach $20, and that was the first thing, you can see the VWAP now brings it down to 16. That might be the next support level, 16. You still have this golden cross. The 50-day is starting to turn over. The 9 is turned over. The algorithm has you out. You're down on the bottom side. I would not try and time this one. But if you're not in this one with the recent crypto stuff, I do think that you should have some exposure to crypto. And Mara is a good one because remember, Mara is a miner. So that as crypto goes up, they start making money. There's another Seeking Alpha article here. Barclays names its second wave of artificial intelligence stocks. They named Coherent, NXP Semiconductors, Western Digital, and Camtech. In addition, Barclays also likes AMD and Marvel. So read that article if you'd like. That's a good one. 4 stocks to watch for today. Goldman Sachs, they reported earnings. Morgan Stanley, they reported earnings. Carol's Restaurant that soared more than 12% ahead of market open after Burger King parent restaurant band said it would buy all of Carol's shares, not already held. Apple slipped more than 2%. The company has reduced the prices of some of its iPhones by 5% in China. This is them just combating China, slow sales, blah, blah, blah. It does hurt them a little bit. So, and the Apple Watch, by the way, will they'll take the blood monitoring stuff out of it in the North America place. Mara, Tesla, AMD, these are the most active, but you can see the biggest stock gainers, ANSS over 5%. DWAC witnessed a significant surge over 10% on Tuesday in response to the market's reaction to Trump's victory in Iowa. Zim, we've talked about Zim. Zim continues to go up. They have pricing power. This is a shipper out of Israel. The stuff that's going on in the Red Sea, you're seeing it kind of just bounce back and forth here, 13. You can trade this one. I would not own this one. But I do think it's one of the biggest movers, biggest stock losers, Chinese vehicles, because the European Union is going to put tariffs on it. Baidu, China's just not investable right now. One of the core portfolio stocks, Boeing, got a downgrade, shocking, to equal weight from Wells Fargo. Boeing is down 5.29%. I did not think you could buy Boeing under $200 again. You will get a chance to buy Boeing under $200. Their earnings are coming up. I think this is an overreaction in the market. I do think that Boeing will be fine. I can't imagine that Boeing's not going to be okay. They're on the downside of the Bollinger Bands. Do not try and time this one. It is worth your while for the long term just to wait until we get confirmation that this one is going to be okay. Don't try and time it. Remember, this one was a nice 48% gain. Just probably moved too fast. We saw some problems with it, but the Boeing downgrade is there. Tesla, this is an interesting one. So remember, Elon sold Tesla to his stock to buy Twitter. Now he's pushing for voting control because he wants to turn Tesla into an AI company. And he says this over and over and over again. Tesla is not just an electric car vehicle maker. Jason did a fantastic video here from TrendSpider on Tesla. Is it worth getting back into? Just understand, read this article. Understand that Elon is super erratic. I think he's a genius when it comes to intelligence of electrical and some of his engineering stuff. We lost confirmation. This note in here on the chart, we lost confirmation. You can see it's down on this gap. Let's remove this. Let's remove all annotations on Tesla. And we'll see where we're at. We have a green candle right now. We opened up at 215. and we're trading at 219 right now. The low is 212. I would not try and time this one. Again, this one, I think you're in a situation right now where Elon is making some moves on this one. You do have earnings coming up on January 24th. They did sell out of their inventory. They had tremendous inventory sales in the fourth quarter. So I would expect this one to work. Here's the 4-hour algorithm, just so you're aware, makes you 87% over 24 months. You lose 38% if you bought and held this one over 24 months. You have 24 positions. Your average win is 18.92. Look at this one. You made 14%. It got you back in. You wound up losing. Now, could you have held from this 201 all the way up here to 266? Absolutely. But just wait. Just be patient. For the long term, I have no doubt in my mind that Tesla will be fine. You're in a capital-intensive business as far as the car-making portion of the business goes. But like Elon says, I think it's an AI business. And if this is an AI business with their Project Dojo, which drives full self-driving, you're just hanging around that 200-day. And this is a buying opportunity. But don't try and time it. Don't be a hero, is what I hear a lot. Cleveland Cliffs got an upgrade, by the way, but it's down 1.35%. I mean, we're losing steam fast. Let's go back to the home. How bad is the market doing? Let's see. Are we down 1%? No, I mean, we're only down 0.5%, but there's a lot down. This core portfolio is significant. I mean, Boeing is down 5% at 204. Apple is down 2.39. It's hurting a little bit, but Cleveland Cliffs got an upgrade. I would wait for this one. The algorithm has you out, doesn't have you in. I would say this volume level down here at 17, probably the VWAP right here at about $18. I think if you get this one at 18, you're perfectly fine. I got out of this one with a nice little gain. I'm looking to get back in. Uber upgraded. It's up 0.14. This one, I think you can buy it under 60. I mean, if you get this one under 60, I think it's a gift. I think it's an absolute gift to get this one under 60. They have earnings coming up on February 6th after the bell. One that I wanted to point out with the good results from financials last week, as we head into financials, DPST in the 4-hour algorithm just got you out with a 104% gain. And that was on January 4th. As you can see, we're sliding. The MACD is going down. This one, it works in the algorithm, even though it loses you 53%. This is through a banking crisis. Your RSI is down at 35. Your MACD is down below the oscillator. Your average win is 34% on this one. I think as we get further and further away from the regional banking crisis and the banks start to do well with higher interest rates, I think this one is one that comes back up. And I think you're looking at probably $100 on this one at some time. Do not try and time it, but look at that interest in this. All the way back to March of last year, when the housing crisis started, DPST started its volume, and it's been an amazing volume driver. I think with the regional banks doing fine, I think this is one you want to keep your eye on. We talked about the Apple generative AI. I will post in the newsletter. Remember, the newsletter is free. So in the newsletter today, I will post the fees that the Bitcoin ETFs are charging. There's a huge difference in fees. Fees matter. You know who's the most expensive? It is GPTC. This is the Grayscale Bitcoin Trust. They are charging an outrageous 1.5%. And when they were the only game in town, it made sense to buy this one. But they are charging an outrageous 1.5%. That just seems crazy when you can get into something like ARKB. And ARKB actually is one of the lowest. They will charge 0.21%. Okay? 0.21%. Still a little bit outrageous, but nothing crazy. I don't think it's crazy to charge 0.21%. If you look at this one down here, you can see GBTC or ARKB on the 5-minute. You still don't have confirmation. Still have no interest in getting into this one just yet. I still think that you hold off on this one. I think that you hold off on all the Bitcoin stuff. But I like this one. If you were going to get into one, I would probably look at that one. Wackiest bets of the trades of the year. Last year. This dude, just so you know, this is a great channel. I like Yummers. He's got a great channel where he outlines the craziest bets from Wall Street Bets. Some dude took $20,000 to $1.2 million in a day. In a freaking day. In one day. So wackiest, well, it's obviously all options. It's betting. It is not typical. So go and take a look at that one. This one is a short from Warrior Trading. Ross Cameron is a fantastic trader. Fantastic trader. And he goes over when to sell. So if you're interested in this, it's kind of the confirmation thing. It's kind of, got a couple of different candlesticks patterns that he looks at, but it's when to sell. It's a great short. It's like a minute and a half, something like that. If you're interested in TrendSpider, or you have TrendSpider, more importantly, this is a double tot scanner. You can import this into TrendSpider. It's so simple to import into TrendSpider. You basically just click on this and you import it. It's great. And if you want to find double tops currently in the S&P 500, Apple, Costco, Disney, Twilio, MSCI, AFL, CMA, CEG. Simple as that. Import it. This one, Netflix. You can import this strategy. This strategy gives you 883% gain with a win rate of 67%. So I'll include this in the newsletter. You just click on it. You can import that strategy. It is unbelievably good. If you're not signed up to TrendSpider, first thing you can do is go over to the link tree. You click on this top link. You'll see. You'll click on that link and you'll get to pricing, $788 a year. You save 56%. $65 a month. If you can't make $65 a month trading, you're either not trading with a large enough account to justify TrendSpider, or you're just doing something wrong. You don't have the tools. So it's $788 for the year. I think that's an easy one to hit with a decent-sized portfolio. Remember, it's not just about the money that you make. It's about the money that you avoid losing. So, for instance, a good for instance is Apple. Take my 4-hour algorithm, which I give you when you sign up for Apple. If you were trading Apple, or if you had Apple in your portfolio, say in your retirement portfolio, the algorithm got you out here with a 12% gain. Apple makes you 33.4% in the algorithm. You make 7.1% over 24 months if you just bought and held. Well, it was clear to me, and it becomes, as you watch charts, you will understand this. It was clear when you got up near this 200, start trimming. In my retirement account, I started trimming. So understand that, yes, the algorithm, in TrendSpider cost, it's not just about the amount of money that you make. It's about the amount of money it saves you on the downside as well. Social request, Jared Williams from Spotify. AQB. What the hell is AQB? Aqua Bounty Technologies. It just included the symbol. So I don't know anything about this. Ooh, downward trending. I mean, come on. AQB. The algorithm loses you 58% over 2 years. You lose 93% if you were lucky enough to trade into this 2 years ago. Your average win on the algorithm is 10.41%. You have no confirmation, just got you out with a 2% loss. That 200 days negative trending, the 50 days negative trending, your volume's right here at about 226. I traded on a super short time frame. Let's look at AQB and FinViz. Their market cap is $8.7 million. Their income, $25 million. Their shares outstanding, 3.85 million. They have nothing. This is a stock that has absolutely nothing. So, Jared, I would stay away from that one. Yeah, I'd probably stay away from that. Zach, VICI Properties. I know you're not a fan of REITs, but these guys are making a ton of money on casinos, golf courses, and there might be a MACD Golden Cross. Good dividend too. This is Zach from Spotify. Let's VICI. VICI Properties. So they have a market cap, again, 32 billion. Way different than 32 million. 32 billion you can trade on. Their shares outstanding, they have 1.803 billion. When you see millions in the amount of shares that's trading, just understand the lower number means good luck in filling that order. If somebody doesn't want to sell, they can hold on to it. So it just, again, those smaller stocks you want to stay away from. But this one, VICI, they have an income of $2.37 billion. So they're trading at a PE of 13, forward PE of 11. That's a little bit high for a REIT, but they're paying a 5.19% dividend. Over 1 year, you lose 9%. So even with that 5% dividend, you're losing a good amount of money. Target price, $35. It is in a downward trend right now. On the daily, right up there. We'll take a look at the chart. Average target price 35, which is its 52-week high. You're 11% below that 52-week high. Let's look at VICI here. And I'll go over to Seeking Alpha as well. Oh, I didn't want that one. Let's look at this, VICI. Sometimes when I mistype something, it's just not good. VICI, let's see. Performance chart, 36% on the algorithm. 9.5% if you just buy and hold. So, but 36%, you can see we just passed the ex-dividend date. That price gets taken out. Climbed up afterwards. Nice move afterwards. I mean, again, that's nice to see after it pays a dividend. A nice 5% gain even after a 5% dividend. You're on the downside here. Algorithm got you out with a nice 9.82% gain. That's 9. Let's remove this real quick. 9.82%. You're on the downside. You don't have confirmation. It's on the downside of the Bollinger Bands. Bollinger Bands are wide open. I would say look for the downside. I would say $30 might be a good support level right here. You do have a golden cross. If we look at the long term on this one, remember we did lose money in the long term. You're seeing a clear just channel. I mean, again, if you want to know the channel, it's between 26, kind of right there, and I would say 35. So I would say 35 is your top. I mean, if you want to trade in this one, Zach, my suggestion would be wait for it probably to hit that $30 mark, and then you can hold on to it until it hits 35. If they are making a ton of money and that's the way you like it, I think that's not a bad one. I mean, I'm not a guy who will look into this one and go, oh my God, I've got to get into this because I've got, I'm a growth guy, a tech guy. It just doesn't excite me. We can look at Seeking Alpha. Seeking Alpha says buy at 4.0. Quant says hold at 3.18. I'd probably believe in that, but you can see here's a strong growth REIT with a 5% yield. That's from January 7th. He says buy. From Spotify too, the Nitro Zeus. Hey dude, great podcast. Keep up the great work. Any chance you could look at Rolls-Royce, RR.L, with a view holding long-term? Let's look at RR.L. They don't have it in Seeking Alpha. Rolls-Royce, let me pull this back. Let's see, Rolls-Royce, there it is. Rolls-Royce Holdings, RYCEY. It's a strong buy in Seeking Alpha. Strong buy in the quant. They have it as A+. RYCEY is the symbol. That is what I'm seeing. Holding spoon. It looks like it's a holding stock. So I'm not exactly sure what that would mean, but I don't see RR.L. I don't see RR.L as a symbol, but I do see Rolls-Royce RLLCF. I mean, there's a bunch of RYCEF is Rolls-Royce Holdings. That's the one that I see. And in the algorithm, you make 142% versus 123% buying and holding over 24 months. It's a solid, whatever symbol you want to trade. I mean, find a symbol for Rolls-Royce. You can get into it, do the research into what it is. It's not something that I'm getting into. I think it's a solid, luxury stuff has been going up. So Nitro Zeus, I appreciate it. I couldn't find the exact holdings. I think Rolls-Royce is an English company, so it might not even trade on the NYSE. Those might just be tracking stocks. Luke from Spotify, Southern Company could be one to look at if it keeps the trend and potentially breaks out. Southern Company is SO. And this is a utility. They own Georgia Power, which is my power company at my house here in Georgia. I'm not a super fan, and it's more personal. They bitched and complained about solar people not being able to feed back into the grid. They didn't want to pay them. They outright just did not want to pay us. So, I got my own issues with Georgia, and they want us to pay for a nuclear plant that is billions, hundreds of billions of dollars over budget. Years out of date. It should have been done years ago. They want us to pay for it. It's just crappy. Again, this is not a thing on the stock, but again, the upward trajectory, utilities they've been beaten down, but this one seems to be okay. It is continuing the upward trend. You are long-term significantly higher over that 200-day. So I do think that this one, nothing that makes me want to buy it. The typically for utilities, Southern Company has a 3.92% dividend. I mean, you can get that in a bond. That's the reason why utilities went down, is because you can get higher yields in bonds, and bonds are safer. So understand, when you're buying Southern Company and you're getting a 3.92% dividend, that's great. But your actual dividend at 3.92% actually goes down as the asset loses value. With a bond, for a $10,000 bond, you get your $10,000 back at the end, and you get 5% for the next 10 years. So that's where the bonds differ, and that's why utilities started losing. I'm not a huge utility guy. The average target price is 75. You're trading at 71. The 52-week high is 75. So I would just, again, I think it's good. Just don't expect this one to get to 100. It's probably capped at 75 is my take on that one, Luke. Matilda from Instagram wants me to look at Toast, T-O-S-T. I think I've said this before. I think somebody may have asked about Toast before. This is a Josh Brown favorite. I think he's added to it several times in the $24, $25, even the $30 range. He thinks it's a big one. I have several restaurants that I order from regularly that use this software. The software is phenomenal. It is significantly cheaper than DoorDash, and modernizing your restaurant ordering system through DoorDash is just incredibly expensive. It got you in here at 19. Right now we're trading at 17. You're getting beaten down by the market. The RSI is downward trending, which means sellers are just selling. 40 is the RSI. The MACD crossed down. It's heading down towards the bottom of the oscillator. You're just seeing some selling pressure. If I look at long term, what I really want to do is try and find where is a good price point for this stock. And if we just pull this back, let's go back to the last time back here in 2022. Let's say people are holding from 2022. The stock in 2022, and this is a weekly, the week of April 4th, 2022, the stock traded between 23 and 17. And that's where you're at right now. You're at 17. So are people holding below this? There is a shelf here at 14. So that's where you're in danger of going down to. Understand, this is still expensive. They need a tremendous amount of growth to continue this. They are losing $309 million. They have 538 million shares floated. They have almost $2, which means they have almost $1 billion. So this isn't a company that's going to dilute you with a lot of money. But what you can see is the target price is 19. The average target price is 19. You're trading at 17. This went all the way up to 27. It was hype. 100% it was hype. The forward PE is 58. That's expensive. Now, January 10th, Goldman, neutral to buy with a $24 price target. Does that mean it's getting to 24 anytime soon? Probably not. They just assigned those price targets. So what do we see on the insider stuff? We see a ton of selling. In fact, December 15th, they sold at 1707. They sold $6 million worth. That's a lot of money to me. Back here on September 18th at $20, the COO sold $5 million worth of shares at $20. So I think if you want to buy this one, I think you have to, A, believe in the actual service. I think, B, you have to believe that they're going to continue to grow. And their strategy is one that's good. Now, if we go over here to Seeking Alpha and look at Toast Matilda, we look at Seeking Alpha has a buy. Wall Street says buy. Quant says hold. You can see the valuation is an F. Growth is A+. That's where they have to grow. Profitability D-. The momentum's F because it's downward. Revisions B+. It's ranked 8 out of 44 in their industry. Their industry is transaction and processing. 4 is solid. Stone Company, solid. You can probably look. This is where Seeking Alpha really comes into play. Is when you look at these payment options. You can see even PayPal, which I hold. This is one that's buttoned up against $60, and it hasn't been able to do it. Square, I hold this one. Solid trade, but for buy and hold, it just hasn't worked. Affirm, another solid trade, just hasn't worked. And Toast is down here at 8. So I don't think it's a good option for me, even though I like the software. I would like to see it put in a little bit more of a solid base over 19. Not just this one hype rally here in 2023 where you saw everything and then it dipped down. If this were at 14, I'd say load up. But it's at 17, so it's in that no man's land. The RSI's right at 50, 48. The MACD's just kind of hovering around the oscillator. There's nothing that tells me to buy. So Roscoe Carnage wants me to look at Hershey. It's from YouTube. You can comment on any social platform and I'll look at it for you. But Hershey, I mean, we've talked about this one before recently. There's no reason to buy this for me. The algorithm loses you 2%. Buying and holding loses you 3%. The algorithm doesn't work. If you got in and the algorithm at 182, you're at 191. Kudos. You got a gap up here between 237. This goes back only to July, where you've started this downward trend. You're 200 days moving down. Your 50 days kind of moving sideways. When you go to weekly, you're just kind of hitting that 200 day. I've drawn it before, 165. I think this is where the stock goes to. I don't think there's any other thing to say. Eli Lilly for Roscoe. Eli Lilly isn't in the core portfolio. Just buy it. I mean, just buy it. This is why you want to own this stock under $600. I don't know if it will get back there. I put this in, but the GLP-1 drugs, this is a stock that will trade like a tech stock in 2024. You have confirmation over this. Buy it. The algorithm has you in at 580. Now, it trades like a tech stock. You make 100% in the algorithm over 26 trades. Buying and holding makes you 155. And I've said this for many times. Even when this gap was down here, I think under 600 is fine long-term, even at the high valuation based on Mounjaro's expected revenue. So there's your two stocks. Larry wants me to look at Casey General, CASY. And the reason he wants me to look is because Trump was seen carrying 8 pizzas out of Casey's General. We looked at this. Long-term, I don't know what the long-term state of this is, but God, it has been just such a good stock. Look, the 200 days moving up, the 50 days moving up there, you're well above this. It's a little bit extended probably as far as valuation goes. Let's look. P's 22. I mean, this is a specialty retail. This is a general store, and you're up at 22 and 21. Target price 309. Your 52-week range goes up to 289. You're trading at 287. It's a little bit extended. If you want to see me look at a 5-minute chart of Boyle for Mo, that was earlier on the YouTube live, so you can look at that one before I started the podcast. You can look at that one on the extended version. Let's go to scans. I have some screenshots that I will include of Webull. Seeking Alpha that I absolutely love. I get an email with all the news. And let's just go over the news from the core portfolio. Tesla dips as Elon Musk pushes for more voting control. Goldman Sachs group in charts. Netflix teams up with retailer Carrefour. Goldman Sachs gap earnings per share. UK warns of world entering pre-war phase, marking end of peace dividend. Elon Musk wants 25% voting control. Vodafone and Microsoft signed 10-year partnership. Apple to drop blood oxygen feature on watch. Uber closing alcohol delivery service. Drizzly. That's a no-brainer to me. Boeing changes quality controls for 737 MAX. Costco and Sam's Clubs are big hits in mainland China. If you didn't see the openings of Costco, Holy crap. I think it was in China. Earnings week ahead, Taiwan Semiconductor, Goldman Sachs, Morgan Stanley, Alcoa, and more. I get all that delivered in my email every morning as part of Seeking Alpha. If you want to sign up for Seeking Alpha, I think it's a solid service. Right here, $50 off coupon on the link tree. But let's go over some of there were quant ratings too on XLY, went from buy to hold, and Oxy went from buy to hold. Let's go over some scans. Disney has a cross up here. Do I want to buy into this one? No. $90, I think you get it under $90. I've said this before. It's trading at $90.42 right now. I think you can buy it under $90. They are said to be selling a portion of ESPN to the NFL for a long-term deal. So that's one that I probably wouldn't buy into, but if you want it long-term, I think you can dollar cost average in based on the algorithm. The algorithm makes you 0.1%, just so you know, over 24 months. That's way better than losing 42%, whereas if you bought it 2 years ago and you're just holding on to it, yeah. Taiwan Semi, TSM. This one's trading at 101. I've said it. Buy it under 100, and I think you'll be okay. But you do have to put up with some volatility around some of the China stuff. China may take over Taiwan Semi. That would be bad for this stock. That would be bad for all the semiconductors. That would be bad for the tech sector. This is one that I think, again, it's in the core portfolio, but I do think under 100 is a solid play. This entry at 101 is probably a good one because the algorithm makes you 10% versus buying and holding has lost you 28% over 24 months. Qualcomm is another one. QCOM. This is one that entry price, I put it here, 140.17. I basically said in the paid newsletter this weekend, here's the MACD cross up. And I said there was going to be an entry price, and it's 140.17. So on the weekend newsletter, I absolutely said that. KOLD, we talked about Boyle. Well, the opposite is KOLD, and this one is up 11% in pre-market. It's up 11% today. You can see KOLD 75.89. You've gapped up. You've got confirmation. Those Bollinger Bands on the downside. Again, if you want to trade this one, the MACD is way down here. The RSI is in no man's land at 48. Up here at 81. The algorithm makes you 9% versus losing 58% over a 2-year period. I would trade this on a tighter time frame, but the entry is obviously there. VOT, this is the mid caps. If we are to get a rebound of the mid caps and the small caps, this is not a bad entry price at $215. For a long-term perspective, this is the Vanguard, so it's a low cost. This is not one you trade for a 10% move. But here, you're down at the 200-day. You could get back here. This is the November 2021 highs at 258. So if you want to buy mid caps there, I don't think it's horrible. McDonald's, Travelers, Ross Stores was an interesting one that I saw because Ross Stores, if you look at the long term of Ross Stores, and I was just looking at the short term of Ross Stores. Look at that. The short term of Ross just got you out as 16% gain. If we go to a weekly of Ross Stores, I think over this time period, 1 year, you're up 91% in 1 year on Ross Stores. LIN is one with a cross up here. This is Lindy, and this is an interesting volume shelf. Look out below if broken. And we can look at this real quick because I do see this right here. If we bring this back, this has been a stock that has been moving, and you've got that gap up there on the 4-hour. But if we pull this one back, and kind of go just after COVID when it took that big one, 2020, you're kind of seeing this volume shelf down here at 337. These volume shelves haven't built. And so you're seeing these huge volume shelves below on this one that's run. That's kind of how you use that one. And finally, BlackRock. I mean, this is one of the most popular trades for the Bitcoin ETF. I think it's a solid trade. 800. I mean, here's the thing about the algorithm with BlackRock. You make 49% over 2 years with the algorithm with BlackRock versus if you bought 2 years ago and you held BlackRock, you're down 9%. So the algorithm really helps you avoid these big drops and big ups. Look at that one. You're getting up. All-time high back here in 2021. You're looking at $973. So you're trading at $793. This is a company that's perfectly fine. Perfectly fine. This could be the Bear Stearns moment of the Daily Stock Pick podcast where I'm like, yeah, it's fine. And then all of a sudden, this one was $570 before COVID, and it was in an upward trend. I mean, you can see right here, $580 back here in 2018. They've recovered. These guys own a ton of stuff. Here, let's go over to BlackRock BLK. Let's look at BlackRock here in the quant and Seeking Alpha. Quant has it as a hold. The valuation is D. That's the problem you have, is the valuation. But they're 28 out of 93. This is a asset management and custody. What's the biggest one? Pennant Park Investments. That's the best one that they say. Seeking Alpha analyst 3.3. But BlackRock, yeah. You want the Bank of New York. Bank of New York has been a solid one, and that's even got a 4.81. If we look at this one, BK, this one has just been a solid gainer. I mean, the Bank of New York has come up in my algorithm a lot as, having MACD cross-ups. Look at that. I mean, this one I said, hey, you're at a 17% gain. Be careful. But the algorithm currently has you in this one, and they just reported earnings and they gapped up. You're in this run of 31% over 77 days in Bank of New York. So, okay, I will be back early tomorrow on YouTube. And if you have any questions, you can go over to the Linktree. Linktree has the TRENDSPIDER sale. It has Join Webull. Do the newsletter right there. Patreon. Visible, $20 for your $20 per month. I think they have a special going on right now. You got Facebook, Twitter, Instagram, YouTube, Twitch, Spotify, Apple Podcasts. If you want to tip me or if you want to gift me because you made money, all of the stuff is down there. If you just want to email me, you can do that too. Substack is right here. All of it's right here. So if you have any questions, hit me up. Okay, take care.
Morning, I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.